Hi, I'm Peter Akerley, President and CEO of Erdene Resource Development. We're a company focused on building a new gold mine in southwestern Mongolia. Part of what we've identified over the last several years is a new mining district. We're planning to develop these projects in sequence, the first one to come into production in mid-2025 at about 85,000 ounces per year. We're listed on the Toronto Stock Exchange and the Mongolian Stock Exchange.
Peter, good to see you. We caught up with you in Beaver Creek, I think it was, and you were just about to jump on a plane with a bunch of people and take them out to site. How did that go?
We had a terrific time in Mongolia. We had two Cessna flights to site. We had almost 60% of our shareholder base represented in those two flights, about 18 people. And, it was tremendous for me to see, but even more so for the investors to see this mine taking shape from an area that had barely seen a shovel in the ground over a year ago. So, we're approaching 60% complete. We have the process plant building structure constructed. We're out there witnessing a 240-kilometer power line being built to China, the non-process infrastructure taking shape, the IWF, and at the same time drilling and expanding the resource around the pit. So, yeah, it was wonderful to share that with investors, to share Mongolia with investors, because it's a faraway place for most people. The investing groups in North America don't get an opportunity to set foot on projects in Mongolia very often. So, very rewarding for all involved.
Yeah, I mean, that's the thing. It was a case of, it's not a case of, maybe it's the Wild West. It's kind of the Wild East, and people hadn't been there and don't understand it, and maybe therefore thought of it in a kind of rather provincial way. So the reality on the ground was that they saw a big kind of infrastructure play. What else did you encourage them to look at or interact with when you were there?
Well, it was interesting. We had an opportunity to not only visit the Bayan Khundii site, we flew over our Zoom mod project so they got a sense of the proximity. We flew over the infrastructure build up to site. So here you are in what was considered remote southwestern Mongolia. And as I mentioned, you have a 240-kilometer power line being built from the Chinese border. You have roads being built for heavy equipment we brought in from the capital city. We flew from there to MMC's coking coal mine in Western Mongolia. So they witnessed this massive steelmaking coal operation with 2,000 employees. At the same time, we took that flight and flew over the Oyu Tolgoi project. So they got a sense of what's about to become the fourth largest copper mine on the planet. So it was a really great sort of image of what's happening in Mongolia over a 2 or 3 day period. And I think a real eye opener for those that hadn't seen it. As you kind of introduced, if you can't see it or touch it, it doesn't seem real to a lot of investors. So to get people on the ground and see what's happening in Mongolia, I've been repeating this for a number of years, but exponential growth in infrastructure in a new mining district that's happening so rapidly. It's an amazing thing to witness, and I was glad to share it with investors.
Well, certainly when it's at scale like that, I mean, that's two very large projects going on there. So more importantly, the ability to do business in country.
That's right. We also, and I neglected to add this, we went to Mongolia Mining Week, and our investors had a chance to watch the Prime Minister open Mongolia Mining Week and really talk about how they were looking to bring in more foreign investment, how they were looking for investors in these projects. We have projects in our neighborhood that we're interested in, and they're welcoming investment into those tender processes. So, that interaction with the Prime Minister, some of our attendees actually presented at that conference as well, and all in all, came away with a very good overview of Mongolia, and in a sense that, government down to obviously mining industry, local stakeholders are welcoming mining projects and industrial growth in these more remote areas of Mongolia.
Right, and to be considered in the same breath, obviously your partner MMC's got to deliver the goods on the ground. How's it going?
So we're at about 60% complete on the process plant, and where that takes us is getting it closed in and heated for winter, and that's a critical sort of path milestone that we need to make here in the next 60 days, which I feel comfortable we will. And with that, we'll be able to start doing the final installation of electricals, instrumentation internal to the plant. But we've delivered all mechanical equipment to site. We've installed the SAG and ball mill. All tanks have taken shape internally. The integrated waste facility is about 65% complete. That's important because as we start mining in end of Q1, we'll need that to be up and running so that we can begin to utilize that facility. So all in all, it's good. There's been some areas of some slowdown. We'll see as winter comes on in Mongolia. We still have about 4 months of -10 to -40. So that introduces some complexities, and perhaps that'll introduce some slowdowns. I think when we look at the capital cost, some potential increases, but manageable increases. So all in all, still aiming for mid-2025 first gold, commercial production as we move through the latter part of the summer of 2025.
Right. And I guess with the aim of taking advantage of these high-priced gold environments, nearly $2,800 US.
It's an incredible thing to be on the doorstep of first gold production. We'll be aiming to produce about 7,000 ounces per month, which at these gold prices flirts with $20 million a month US in cash flow. Or in revenue. And, we're looking at about 50% of that as cash flow, free cash flow to us, which allows us to pay back the debt within 2 years while still carrying out aggressive exploration, which is really a critical path here for us, or the exciting part of this. I've spoke to you many times about this. We elected to build this first small mine that some would consider to be on the smallest side, 85,000 ounces per year. But that was our strategy, to get the cash flow, avoid dilution, give us the wherewithal to begin exploring with the potential for things like we just announced, 40 meters of 7 grams per ton, 200 meters from the pit boundary. We're just in a very, very healthy, fertile area that's demanding more exploration. And I can't wait to get to the point where we can actually have the cash flow to do that.
The $20 million is your share of that's
revenue, on a monthly basis. That was 20 million of revenues. On an annual cash flow basis, we're looking at these prices at about $130 million of free cash flow unlevered, 50% to our credit.
And then, as you explained, you want to get after the exploration. You've got other projects, other targets to go for. Can you kind of break that down? What happens to that cash when it starts flowing through?
Sure. Yeah. So if you just take the 130 million, assume current prices maintain or hopefully go higher, we'd be obviously looking at retaining some of those earnings in the subsidiary to carry out maintenance and keep a base of monies. Our 5-year exploration plan has us spending about $4 million US next year, but we'll rapidly jump that up to about $12 million a year as we move into 2026. So you're looking at about $40 million in spend on exploration in that 4 years that follow startup. But that's still only about 10% of our cash flow, after-tax cash flow. So obviously you'll use a significant portion of that to pay down your debt. We'll be as aggressive as we can with that, but it still leaves $200 million thereabouts to come back into dividends back to shareholders, and ideally back into the hands of our shareholders in Canada.
What do you think people should be looking at and appreciating?
Well, I think, I've been saying for some time, and I'm sure a lot of our companies in our industry have said the same. We just didn't see any movement in the exploration and development companies until recently, and now we're starting to see that re-rate come into our share price, and we'll continue to see that until we get the first gold. There'll be that skepticism until you get the cash flow. So by the end of this year, I'd expect to see us come into a price that's somewhere between here and $1 per share based on what I think the cash flow represents. But the upside of this is where it really gets exciting. And those next milestones will be, where are you expanding next? Is this going to be a second development? Are you going to bring in higher grade into this plant to allow for production over that 85,000 ounces? Those will be those next milestones, and we'll be able to deliver on that as we get into the exploration programs.
Okay, interesting.
I think I'd add one more thing to that too, which we often leave off the table here. The joint venture is on the gold projects, but 35 kilometers to the east of the gold district is the Zunmod molybdenum project, and we are in the planning stages of launching a program in Q1 of next year that'll see us push that into the development pipeline, taking it through the various studies from PEA through to feasibility over the coming years.
What's the kind of game plan here? Because once that's up and once MMC have kind of finished their build, that's kind of up and running, they're operating it. You're going to get after the exploration and drill program here, and you've got we'll talk about them in a second, the existing projects on the ground. You've got to start talking the story of showing potential of size, scale, revenue, etc., to people to kind of move from where you've been sort of, I guess, trapped for the last sort of 4 or 5 years as a explorer with potential, and potential developer here. What does the business shape start to look like going forward once you've kind of got a producer badge that you can start using?
Sure. So we've laid out a 5-year plan that includes as a first priority expansion and extension of mine life in the immediate vicinity of the Bayan Khundii pit. So as I mentioned, the drilling that took place over the past several months has allowed us to reinforce the fact that we have hundreds of thousands of ounces of gold now that fall into a pit at $2,400 gold. So we have that opportunity to push it west. We also have the Ulan ore body that I call it an ore body. It's not yet in a resource, but it's also showing us intersections of 40 meters of 8 grams per ton. So those two areas are probably the lowest hanging fruit to provide us with an opportunity to drill that off, determine whether there's an expansion opportunity there to perhaps take this up into the 130, 150,000 ounce per year production realm. At the same time, we'll be doing further exploration at Dark Horse, where we have a small satellite pit. And then the next project will be Altan Nar. Altan Nar is currently 500,000 ounces of gold at about 2 grams per ton. It requires a significant amount of exploration, but today I could say that that will be an economic mine at some point in the future. We'll begin to advance that, and within our 5-year plan, we're looking at years 3 to 5 to get that into the feasibility and development pipeline. So you put those two things together, and you potentially have that 250,000 ounce per year production facility, really without doing much more exploration. It's really drilling off what we know today. We have in our field of vision a couple million ounces of gold in our existing deposits. So yeah, those will be advanced to further definition, feasibility, development, at the same time more grassroots exploration and potentially acquisition around the site as well. There are some interesting opportunities.
Let's maybe kind of move on to Dark Horse and some of these other projects proper, if we maybe like getting into it. With Bayan Khundii, it's not huge. It's good grades for sure. It's good margin for sure. And you kind of come back to that kind of scale discussion, life of mine discussion, total returns. So talk about how you open up the district with what you've got and what you might.
Maybe just a couple of snippets of the character of the Ulan and the Dark Horse discovery to give those viewing this interview a sense of what's to come. So in 2021, we made 2 discoveries. At Ulan, we've drilled over 300 meters of over 1 gram per ton, starting at 80 meters depth, open at depth, intersections of 40 meters of 8 grams. That's not yet in a resource. That's an area that we're continuing to explore. It's about half a kilometer from the existing pit. At Dark Horse, 2.5 kilometers north, some of our first holes there intersected 5 meters of 120 grams within meters of surface. We quickly drilled that off and established 50,000 ounces of 7 grams. But that target area is 3 kilometers by 2 kilometers as is seen only peripheral or very low level of exploration. So those are just examples of that low-hanging fruit in an area that's never before witnessed any exploration. Not only has it not witnessed exploration, I don't think anybody's walked across this before because we walked out there and found 4 deposits at surface, 4 of the 5 deposits. So it's just, it's hard to communicate just how exciting the exploration opportunities here are. We only have developed the resources in the top 150 meters from surface, very limited deep drilling. As I mentioned, Ulan continues open at depth. So yes, I'm extremely confident there's going to be additional discoveries here, and we're just setting the table for what will be a very large multi-mine district in the future.
Right. Is anything about the last 4 or 5 years in the equity markets that lends caution to your strategy, or do you think now gold is on a rip and the only way is up? I mean, how do you treat your planning?
Yeah, the first part of your question, everything suggests there should be caution. Looking forward, the fundamentals for gold. I'm not a gold expert analyst, but as somebody who's been in the mining industry for 30 plus years, I've never seen the fundamentals so good for gold moving forward. Whether it's geopolitical, currency support from world banks buying gold, inflation, whatever you might look at as that factor, the gold price looks very stable or increasing from this point forward.
Right. Okay. Like I say, I think everyone's we're going to have polar apart differences in opinions from economists and pro gold. Maybe some people thinking that gold's going to come off. Who knows? We'll take advantage of it and love it while it's here. That's for sure. And the margins are good enough. Thank you very much.
Maybe just to add to that too. One of the reasons we decided to move forward with this specific project is its resilience to fluctuating gold prices. When you have a 4 gram per ton head grade, you can withstand any of those concerns that you might have seen historically. So do I think gold prices are going to stabilize here or get higher? Yes, but we're probably in the best position, or one of the best positions of any gold project globally in terms of grade and costs, and that includes capital and operating costs. So we're in a very enviable position from that perspective.
I'm hearing from you that there's quite confidence for sure, but on the drilling and the exploration front, you're going to retain some level of kind of caution to how you go about it and not just burn money for the sake of burning money. There's a plan.
No, that's right. I mean, we've stuck to this strategy, but I would just remind as well that our exploration costs here are quite low. Our targets are largely at surface. So when I talk about a $4 million US program in 2025, it may not sound large, but that's largely been the spend we've had to make over the last several years to find other targets. So we can do a significant amount of work with that. And as we move through 25 and into early 26, we'll see that ratchet up significantly. And that's separate from what we'll do at ZunMod, which is funded by Parent Co. And we'll move into some of that exploration in conjunction with the Bayan Khundii exploration in Q1 of 2025.
Okay, and obviously the business plan and bringing people like MMC through here suggests that that's a model which has worked so far. Is there any reason to change that? And I guess the answer I'm trying to get to is, with this revenue coming in, it funds the activity which you planned, your G&A, etc. Is there any reason for me to think that there's going to be, as exploration companies tend to do, is have dilutive financing raises going forward?
Mm-hmm. There's no reason for us to look at any equity raises in the near future. We have $80 million in senior debt. We have 3 commercial banks offering us operating lines to fund us into that initial production. So no, not at this point. That's really the strategy we've employed here. In terms of MMC's thinking, we're on the same page. We're looking at this as the development of a new mining district. It's you can witness that by the monies they've invested through their affiliated companies and bringing in that power line from China. That's a $25 million investment. That's not our capex. We're doing a power purchase agreement, but that's a bet that MMC group of companies are making on this new district. So, yeah, I see us fully focused on expanding this, new discoveries, new developments, and excited about it.